This is Viva Fry.
I'm Dr. Peter McCullough.
This is Tom Luongo.
This is Chuck Prodnick.
This is Alex Kreiner.
Hey, this is Brad Wall.
This is JP Sears.
Hi, this is Frank Peretti.
This is Tammy Peterson.
This is Danielle Smith.
This is James Lanci.
Hey, this is Brett Kissel, and you're listening to the Shaun Newman Podcast.
Welcome to the podcast, folks. Happy Tuesday. How's everybody doing today? Before we get on to today's conversation, let's talk a little silver gold bull, shall we? The number of ounces of silver needed to buy an ounce of gold are now at near 30-year highs. Silver is a bargain price when compared to gold, and it's a perfect time to protect a portion of your savings with silver. Silver Gold Bull has a wide variety of best value silver for every budget. Simply text or email Grahame for details. Whether you are a seasoned investor or new to precious metals, Grahame will work with you to answer your questions and recommend the best products to meet your investing goals. Anytime you're on silvergoldbull.ca or .com, just make sure to reference the SNP, and it helps them, helps you, and helps me. Profit River. Well, when it comes to guns and all the things that come with guns, you want to contact Profit River, specifically Joel. He's the primary contact for all you listeners. He's their phone and internet sales manager, and, well, it's going to bypass all the front desk staff. Not that there's anything wrong with them, but it's going to get to somebody who can answer all your questions. You can email them at snp@profitriver.com. You can also just stop in a store, give a phone call. And every time you're making a purchase at Profit River, make sure to reference SNP. It gets you thrown in for a $100 gift card each month. And, well, just go to profitriver.com. You can see everything they're working with. They are the major retailers of firearms, optics, and accessories, and they serve all of us here in Canada. So it doesn't matter if you're over on the East Coast, the West Coast, up north. Profit River can get you what you want today. RecTech Power Products, they're committed to excellence in the power sports industry. And, well, for the past 20 years, they were at the Cornerstone Forum. They had one of their golf carts. They had a side-by-side, their Defender there. And I was out on the links yesterday, 2 days ago, I guess. And it was cold, not going to lie. But it is golf season, even if it is miserable out. And when it comes to, the summertime, the spring into summertime season, and you're getting out on the links, you might be looking for a golf cart. And let me tell you, RecTech has some pretty sweet rides sitting there. And if you haven't stopped in on the west side of Lloydminster to take a look at their showroom, you really should. They got everything from boats, Lund boats, so the Cadillac of the fishing world. They also got pontoon boats, the Sea-Doo pontoon boat, which is super cool. And then, of course, all the other, side-by-sides, quads, etc. And it's pretty, well, it is. It's a beautiful showroom, and you should really stop in when you're traveling through Lloyd, or if you're sitting in Lloyd, go to the west side. They're open Monday through Saturday, and you can see everything they have. You could also just look at rectechpowerproducts.com and let Ryan know if you stop in. Ryan's the manager there. Let him know that you heard about him from the podcast. PlanetCom, when you're busy running and growing a business, trying to stay on top of the ever-changing world of information technology, well, it can be overwhelming to say the least, and they want to take care of that for you, leaving you to do your thing while they do theirs. For over 22 years, PlanetCom has been there to boost your productivity, by proactively managing every aspect of your IT infrastructure, both in-house and in the cloud. Of course, if you've visited the ShaunNewmanPodcast.com website, my other one got stolen and is now a Chinese gambling site. But the new one, you can see how they've, it's a pretty sharp-looking website. So if you're looking for, I wonder what they do, go to the ShaunNewmanPodcast.com, and you can see what they have built me. And for everything else, just go to planetcom.ca to see everything. Substack's free to subscribe to. We just released the Cornerstone Forum a couple days after the Cornerstone Forum, so all of it is up in its entirety. There's a bunch of free things you can watch, and then there's stuff behind the paywall to get the entire thing. But if you're wanting to take a look at the Cornerstone Forum, it's on Substack. It's down in the show notes. And then, of course, we've been doing Week in Reviews. I have been slacking, I'm not going to lie. So to all of you waiting for a Week in Review, we're hoping to get back to it here this coming week. It has been a stretch, and we'll get that back up and running here in short order, folks. The new studio, I just took a tour of it yesterday, and it is looking sharp. And if you're wanting to be a part of anything to do with that, get your name on the legacy wall, the value for value idea, shoot me a text. We're looking for all types of things, anywhere from money to materials, labor, skills. You get the point, and would love to have you be a part of that. If you're listening or watching on Spotify, Apple, YouTube, Rumble, X, make sure to subscribe. Make sure to leave a review. Make sure to hit the retweet button, folks. We rely on you to get out these different episodes, these different conversations, and appreciate all the help. Now, on to that tale of the tape. Today's guest has been trading commodities for 20 plus years and is a managing partner at Echobay Partners. I'm talking about Vince Lanci. So buckle up. Here we go. Welcome to the Shaun Newman Podcast. Today I'm joined by Vince Lanci. Sir, thanks for hopping on.
Thanks for having me on, Shaun.
Well, you sir, we wanna start, folks, with you were supposed to be on stage at Cornerstone, and then I told people in the audience he couldn't make it because of heart issues. I said you were okay, but that you just weren't allowed to fly. Maybe you could just summarize what went on so people know that you're not bedridden.
Yeah, okay. My physical health is fine. In fact, I was probably more active after getting the news. But I have this thing that I was born with, right? It's a heart murmur. In the old terminology, it's a heart murmur. And every so often it has to be looked at. When I travel, it has to be looked at. And so my primary freaked out. He's like, wow, your heart murmur is really loud. Let's get you to a cardiologist and let's have all these tests done. And don't fucking travel. Excuse my French. I'm sorry if this is family friendly. And don't travel. And I'm like, why? He goes, well, because, and then he gave me this whole, if this happens, it's like an aneurysm in your heart. And I'm like, oh, that's cool. And I was like, no big deal. And he kind of freaked me out. You leave at a doctor's appointment and you start going, all right, is my will done right? And, anyway, so a week later, the cardiologist has done all these tests and he goes, yeah, it's worse. We'll talk to you in 6 months. Don't go anywhere. And I'm like, what the fuck? But I'm fine. It's an excuse not to exercise, right? For me, right? Anyway, so that's it. Anyway, but not more importantly, but equally important. So that's the reason I didn't show up there. I'd like to apologize or explain why my absence by saying that. I appreciate your discretion. It was a panic moment for me. I'm fine now. And I really regret not being able to be there, especially the conversations that we've had. There's everyone I want to listen to, but this is the coffee in me. I'm actually excited about this. I wanted to talk to Martin Armstrong about using gold for trade deficit rebalancing. That was something that I know that he did years ago, and I studied his work back then. I wanted to talk to Tom about freedom, which is something I was writing about at the time, and I wanted to talk to Tom Bodrovic because he and I just hang out and get along. He's got a new project he's working on, and I wanted to obviously talk to you and the other guys. So I really wish I could have made it, and when it comes around again next year, I'll be prepared.
Well,
something like that.
I tell you this, I've been getting texts because I was in the lead up to the Cornerstone Forum, I'd let it slip on the podcast. I don't know if I'm doing this again. Like, I was so stressed. I was just like, there was a lot going on trying to get it there. And I can say now that was a moment of weakness on this side because we're already in works for getting it back in 2026. And the interesting thing is from the conversations I had with all the names you just mentioned, they're like, who would be cool to have on stage next year? And the resounding name was Vince Lanci. And I'm like, whoa, we're going to extend the invite a year early. We're going to bribe his doctor so we can get him here somehow, some way, and put you on stage. But to all the people listening, the Cornerstone Forum is going to come back. Shaun is feeling less stressed right now, which means he's going to take another crack at it. And right. I know people missed having Vince on stage, but everybody's just thankful you're okay, right? Like, whether it was really bad to, just a scare, either way, we're all just thankful you're okay on this side, Vince. Nobody's got any hard feelings for any of that. We had Brett Olin, the CEO of Bow Valley Credit Union, step into your spot and did an excellent job. And so you don't have to worry about that. The show was fantastic. We look forward to hopefully getting you on it next year.
Thank you. I mean, look, I recognize the work and effort that goes into that. Every detail you have to be responsible for. So, when a guest cancels or can't make it, or whatever happens, if the food doesn't come from the catering, it's like a wedding. It's pretty hardcore. So I recognize the work that you put into that, and that's why I was disappointed that I could not show up. So thank you.
Well, I tell you this, I got to have a conversation in my hotel room. It aired on the podcast, and for people who watch, I really, really push you to go to just Spotify or Apple or whatever one you listen to, because we had no video. I was in no mood to turn on the video cameras. I'm going to slap that part of me next year, because I am going to turn the cameras on next year so it can have video to it. But I get to sit as a fly on the wall and listen to Tom Luongo, Alex Trainer, and Martin Armstrong have an hour and a half conversation in my hotel room. We recorded it all, and it was just phenomenal. I got to ride. I got to be Martin Armstrong's driver for the weekend, pretty much, and just sit and pick that man's brain. I mean, of surreal experiences, Vince, that is way up there. And the fact he came to Calgary, came on stage, was so generous with his time. Not to mention all the other speakers, right? I got a ton of time for everybody I put on stage, but Martin was a surreal moment. I don't know if that happens again. Certainly, we're going to try. We're gonna ask Armstrong if he's interested in coming back, but you just never know. He's a busy man, and that was super cool. So that all being said, okay, you're on today. I think we want to start with gold. I'm assuming that's where you would like to start. If you got somewhere you would like to start before that, by all means. But that was one of the things you were coming to talk on at the Cornerstone Forum. If you want to take it in a different direction to start, it's your floor.
Well, I mean, we can briefly touch on gold, although I could talk about it a long time. But I know that you want to talk about silver, and I'm very interested in that, because we need to talk about silver. But just looking at my list of things that I even know what I'm talking about. There's a couple things going on in gold right now. I mean, there's a million things going on in gold right now, right? So I think the way to look at it, in terms of, most of your audience knows what's going on, and they might be asking what's coming. And in terms of price, I'll throw this out there. This is like one of those cheap headlines, but I mean it. When gold, first we'll talk about that, and then I'll touch on what's coming in July. And I haven't talked to anyone else about this, so I saved it for you, and I think it'll be the topic to talk about when it comes to gold going forward. All right, the price part. When gold broke 3,000, people were wondering about where it would go, and that was in March. And when it broke 3,000, we tried to figure out where it would go as well. And what we came up with a metric. And the metric was, assuming everything else stays the same, meaning the physical demand out of China continues and it's actually increasing. And the U.S., and nothing else happens economically. There's no big rate hikes, or there's no COVID scares. We started to handicap the U.S. or Western, I wouldn't say U.S., but I would say, Western Hemisphere gold demand, ETF buying, like stock buying. And we determined that if the ETF demand, which is very low, there's no one in the West who has money in gold ETFs, right? And that's what they usually use. They don't go out and buy bars or coins like I think our core does. They're very underinvested in gold. And I did an analysis, and it said if they get back up to the levels that they had when the Ukraine-Russian war started, okay, which wasn't a huge number, but it was higher. If the ETF demand gets back up to that, this is when it was trading 3,000. I said gold will trade between 3,600 and 4,280. Now, the prices may seem random, but they're not, and they're based on if everything else is the same and you put this much water in the container, it's going to go up by that much. That's simply what I did. And sure enough, about 1/3 of that money has come back into the market, and gold touched 3,500. So I feel very vindicated in that, and I'm going to repeat it again. I'm not saying that we have to go up over the next day, week, or month, but I am saying as ETF demand comes in, the glass is only going to hold so much water before it goes up. Which brings me to China, right? The China demand, and I've only talked about this I've written about it, but I've only talked about this briefly publicly, so I wanted to say something good for you after having a heart attack. No, I didn't have a heart attack, but anyway. China not only is buying gold as a central bank asset to replace treasuries, they've also directed their insurance companies to buy gold. Now, why would they do that? Because insurance companies, historically, in the US and everywhere before stocks were really big, only put their clients' money in insurance products that were interest rate based, bonds, shit like that. But interest rates in China are so ridiculously low that they don't have any good products. And so China said to the insurance companies, you can now offer gold as an insurance product, which is perfectly logical. So now the insurance companies are creating insurance with gold attached to it. You know, store your wealth, save your wealth, and if you die, whatever the reason, variable annuity type of thing. And it struck me as incredibly important because if you go back in history when Reagan was president in the US, it's called liberalizing ownership. He told the insurance companies who were only using interest rate securities at the time that they could buy stocks. And that was in 1982, 1984. And what happened to the market in the next years after that, aside from the 87 crash? Insurance companies started saying variable annuities. You can buy life insurance tied to the stock market. And everybody started buying stocks more and more. China is doing to gold. Remember, China replicates what everyone else does. They copy it. China is doing to gold what we do with stocks. So that's like a bid that's not going to go away. Every Chinese person out there is going to go, what are your insurance products? I'm not going to buy stocks. They don't trust stocks yet. What can I buy? Well, you can buy this bond insurance at 1%, or you can buy gold. Oh, shit, I'll buy gold. And that's more and more. Like there's a tidal wave of gold demand behind a wall that's potentially going to break through. So that's not brand new information, but my explanation, no one really, I think, has gone to that length to describe why it's so important. It's not just insurers are buying gold, it's insurers are buying gold for their retail clients, like stocks under Reagan. Here's the brand new thing, like yesterday. The BRICS are meeting in July. Okay, should I continue? I mean, I'm just talking my ears off here. All right. The BRICS are meeting in July, right? And that's their annual summit. Everybody talks about it, and there's always some focus. Last year it was BRICS Pay. That was like a credit card, mostly marketing. It's not real yet. Before that, it was mBridge, which we kind of broke back then. This year, well, over the last 3 meetings, there's been a progression. They all get these homework assignments. Okay, the meeting's over, go do this. The meeting's over, go do that. Well, this year, the meeting last year was about China. China's homework was to strengthen the yuan globally, to make it come out, make it international. Now, it has a long, long way to go before it gets there. But they've since, for the last year, taken steps towards that. All kinds of things. Cutting contracts, getting more oil to trade in yuan, things like that. I'll pay you in yuan for your grain. So this is all happening slowly. Now, is it going to topple the dollar? No, but here's the point. the yuan. So now let's say you and I are our country, right? The Shaun Vince uh, country, and we want to sell our grapes to China, and China says yuan's international now. We'll pay you in yuan, and you and I look at each other and go, I don't know about that. I mean, if I'm going to own a paper currency, I'll buy, I'll buy a dollar or a Canadian dollar, or, a boon, whatever. I would buy something that at least I know I can spend locally, because if I can't spend it, I don't know what's going to happen over in China. Authoritarian, communist, whatever you want to call it. So how do you make, if you're China, guys like us, use their currency? Well, you got to put an anchor under it. And the U.S., what is that anchor? Treasuries, right? We trust treasuries. We trust treasuries. AAA until Friday. What does China do? China's going to come out at this meeting, and they're going to announce, since they've moved to internationalize the yuan, we can do it now. And you and I are going, who wants that? I want something that's more stable. China's going to say this, well, we now have 40% of the gold volume in the world trading on our exchange, the Shanghai Futures and Shanghai Gold Exchange. We now have some of the biggest vaults in the world. We have more gold in our region, for all the countries in our region, in one place. And we're going to do two things. We're going to open up franchises of our gold vaults in other countries. So it's like the COMEX opening a vault in different countries. Now, why does that matter? It matters because everybody doesn't really trust everybody as much. So if the gold vault is in your country, then your gold is there. So now we've got the yuan, that's a piece of paper that can trade internationally. And now China says to you and me, hypothetically, what if the yuan was convertible into gold? And be like, yeah, but where's the gold going to be? Well, we'll put it in a vault in your country. So they're going to internationalize their gold vaults. And by doing that, make people trust using their currency. And by doing that, make people use their currency. And that's what's going to happen. That's what they're going to do. They're bringing gold out. They're coming out of the box with it. They're going public with it. And simultaneously, to make it even more juicy, Bai Xiaojun, he's from the mainland in China. He and I have a professional relationship. And he informed me that China is, to give you an idea like how committed they are, China is offering discounts to domestic retail of anywhere from 10 to 30% on gold products to create gold demand. So they're basically kind of goosing the market a little bit now. So my point is, the summit this year for the BRICS, I think it's like July 7th. We've got July 1st, when Basel III gets passed or approved. It's a rollout, but it's an event. 4th of July weekend in the U.S., which means everyone will be drunk and not paying attention. July 6th, 7th, and 8th, the BRICS say, you know what? You can own your gold in your own country. You can own your gold in Saudi Arabia. You can own your gold in the United Arab Emirates. So create a network of exchanges tied to physical gold. And all of a sudden, they're not going to put an exchange in Canada or the U.S., but all of a sudden it's like, I may not trust China totally if I'm in the Far East or the Middle East, but I sure should trust them if I can go visit my gold. And that's it. So gold's going to have another raised bid. There's going to be more trust in China because of that, indirect trust. So that's my spiel. Gold's coming out. It's coming out of the box. It's going public.
Now, once again, I told Vince this before we started, because where I sit on the level of understanding of this entire conversation, I'm like the newbie sitting in the classroom going, So here comes dumb questions. When you say gold's coming out, I thought gold had its come out with BRICS. And forgive me if it wasn't last year, it was the year before, but didn't they announce or tie in their currency to gold, and that was the big come out party? So what separates that announcement for the one you're talking about?
Right. Okay. That's a solid point. I think the difference between that is, first of all, they did not, just to be clear about this, nobody said they were backing their currency with gold. Nobody said that, okay? There is what's called a soft peg occurring between China and gold, and all that means is we'll keep our eye on gold, we won't let it get too far away from it. But no one has said that yet. And that's part of the hype, part of the stuff that people want to get ad clicks, okay? So what came out, and I was trying to keep it, on the straight and narrow because it was exciting enough, but just people had to go crazy with it. China, all these countries, it's all about treasuries, okay? They're not seeking to replace dollars. I mean, they are, but that's not the point. The thing is, all these countries buy treasuries, and that's their CD. Remember CDs? Your mom and your grandma had them? Certificates of deposit? That's a U.S. thing. I don't know if you had them in Canada. CDs, like T-bills, right? CDs were like what old people put their money in. I get my 4% interest and that type of shit. Well, nations, the BRICS, because their bonds sucked, and their bonds suck, so that means their currency sucked, they would put their money in treasuries. And then when they needed to buy something, they would cash a treasury or take a dividend, and they buy their oil, they buy their food, they buy their grains, right? And that was the store of value, or the collateral. It's the collateral, right? So I'm going to give you dollars. Where am I getting a dollar from? I'm like Brazil. I'm going to give you dollars. Where are you getting the dollars from? I got some treasuries. I'll liquidate them. I'll give you that. The first big BRICS move was, China and these other countries saying, we don't want treasuries anymore. They're not safe because of the Russia fear, because of the confiscation, because of sanctions. We don't want treasuries because you can take them from us. And you've got all this debt, you've got all this inflation. We want something else that we can cash in and buy our oil with. So everyone goes, what can we use to replace treasuries? Your bonds? No. My bonds suck. Your bonds? No, they're not good enough. What are you going to buy, like Saudi Arabian bonds? No. What are you going to do? You're going to find something that's neutral, that can't be manipulated physically by the government, that you can actually see, and that everyone agrees on its value. That's gold. So they say, all right, gold. Let's use gold to replace treasuries. And that's what they're doing now. They've been doing it for 3 years, right? But the problem comes, and this is where the yuan comes in. The problem comes when, all right, I got my gold brick. I need to go buy oil. Well, what do you got to do? Well, I got to change it into dollars, right? So you're selling gold, which is not as quick to do. It's all about, I need to go to my ATM and get the money now. I need to wire it now. There's no 30-day clearing. There's like 5-second clearing. And so China and all the guys get together, right? And they say, let's use our own currencies with gold. And everyone's going, yeah, but I don't like your currency. I don't like your currency. I like the gold idea. So China says, wait, I got an idea. Let's use our currency. Let's use the Chinese. You can see what they're trying to replace the dollar regionally. Let's use our currency. It's big. There's a lot of it out there. Everyone knows about it, and we're making it more acceptable. Like using a MasterCard. We're making it more acceptable globally. And so they create mBridge, which is now, I think, called BRICS Clear. All that really is it's kind of a thing that takes the gold and converts it to money without any waste of time. All the other stuff aside, it's here's the gold. We know it's there. We can verify that it's there, and we'll give you money against it. It's like a loan against your collateral. So it's the gold replaces the treasury, yuan retraces the dollar, or whatever currency you need, and boom, you're out. So what happens? Well, they own less treasuries. They own more gold. So what happened in 22 is we have the old mechanism. We have the mechanism to replace treasuries and dollars. We're not backing our currency in gold yet. Maybe they won't. And I want to say it doesn't matter if they back their currency in gold. backing your currency in gold creates problems. What matters is that when I look at your books in China or another country, and I go, let me see your country's books. You have this debt, you have that. How much gold do you have? Oh, you got a lot of gold. Your currency is good because I know the gold is there and you're good for it. Like you can always sell the gold if you need money. It's like, you don't have a lot of cash, but you've got Van Gogh art. You've got Jackson Pollock art. Let's use that as collateral. Now, you can't, but that's the point. So you've got a lot of valuable things. I own houses everywhere, Well, in a pinch, we'll sell one of those houses. But it's kind of hard to sell a house. And China goes, well, we can use our currency. And we can use this Enbridge thing. And we can flip it out. We can do what the U.S. does with treasuries, with SWIFT. And so as you move from what people thought was going on back then, they're backing you're moving towards not everyone, but the people that are most committed to this idea are going to say, what's a currency? Brazilian real. I don't want to use Brazil, but a Middle Eastern currency like Saudi dollar, right? Call it a Saudi dollar, right? Saudi dollar. I have Saudi dollars and I have gold, right? And I want people to use Saudi dollars, but the world won't accept Saudi dollars. I'll take my gold, show it to China. China will say, I'll give you yuan for Saudi dollars. And they do an exchange rate. And then the yuan goes out and buys oil or sells oil or does whatever they have to do. And so you've created an ecosystem separate from the US dollar. Now, there's a lot of problems with this. This is not like easy to do, but that's the core of it. So going forward, there's going to be even more demand coming out of the East for things other than dollars. It's not like they're going to go out and sell their bonds in dollars tomorrow. They're just going to stop renewing them. They're going to stop rolling them. And they've been selling them too, but they're going to not roll them. When you have a treasury, you get a dividend, and that dividend is what you live off. So gold's going to go up from that. It has been going up from that. And that's what's coming out in July. What's coming out in July is the BRICS Summit, to bring back to your point, is yuan is, look at all these contracts we set up. You can use the yuan for oil, for grains. You can buy your Pokemon with it. I mean, you can't, but that's the idea, right? We're working all this stuff, right? Okay. Now we want you to use the yuan. Well, okay, here, the gold, all that gold that we all have in this big pile, let's put it under one network in different places. And
spread it out.
Smart. I'm sorry?
And build trust. If I don't know if I'm going to summarize this right, so this is where you can just interject. But as I get older, you start to realize things just don't happen overnight, right? So you're talking about trying to move off of the American dollar and getting out of the treasuries and all the things that make, and I'm oversimplifying this, my apologies, but that really back the United States as the global superpower, the currency that is of choice pretty much everywhere in the world. Everybody looks at a US dollar and goes, I trust that. Right? And so then everything goes down with SWIFT, Russia, Ukraine, and that sends a shockwave across the world of holy crap, look at what they just did. And so then the offshoot of that, what's been happening in the background, and not in the background because it's just on the other side of the planet. So for a guy sitting in Alberta, you just don't see it every day. You don't even think about it every day, right? It's just life goes on. And what's happening is this slow movement, and we're in such the early stages of it, away from the U.S. being able to control everything because they did it to themselves by what they've done to Russia and I'm sure others. And so now you have, in July, another step in the process, which is China trying to make their currency attractive to people so that, and by attractive, I mean trust it, that it actually is worth the paper it's printed on, essentially. And by doing that, or trying to showcase that, you're saying they have all this gold and they're going to find ways to put it in a few different countries to show, hey, trust us. We're trying to build out a currency that you can trust. I hope am I summarizing that relatively correct?
Please, you said it better than I did. That's right. I'm going to take this transcript and say That's the story. Yeah, exactly. That's it. You summarized it perfectly. It's about building trust and internationalizing their currency and using gold to do it.
So if you're a gold guy, you love gold, is this a good thing for your gold or a bad thing for your gold?
Well, I mean, your knee-jerk reaction is it's a good thing, right? And it is a good thing. There's no real pushback. But what I want to be clear is I could throw water on things as a risk manager. With gold, more than any other asset, even more than silver, with gold more than any other asset, the last thing. So I'm bullish on gold because of this, but not price spike, cocoa, Nvidia bullish. It's like I'm telling you, there's an 80% chance of a $1,000 increase, as opposed to a 5% chance of a $20,000 increase. Mathematically, it's the same number, but slow and steady wins the race. We've had a pretty torrid run. So anyway, to be clear on that, the gold market price is the last thing to move when there's demand in the market. So when demand hits the market, the first thing that happens to gold is not that price goes up. It's that they find someone to borrow it from. They rob Peter to pay Paul. And so you never see it in the price. It's under the surface. So they want the gold. The gold gets repatriated. All of a sudden, there's not as much gold in the vault. The price hasn't moved, but the vault is empty. And then the lease rates go up. And then all this shit happens. And then the price moves. So the news that you and I are talking about here, the information, the truth, the fact of it, takes years to manifest. China's been de-dollarizing bonds since 2009, more aggressively since 2020. But gold didn't catch fire until 2022. So these things that make me bullish gold make me have a very high certainty of a move of X. They don't make me say there's going to be a chance that it's going to move 10 times X. So the water that I'm throwing on this is not to go out there and buy it, because you think price will reflect what we're talking about here in 5 minutes. No, you don't think the U.S. is looking at that? So no, it's going to take time. But it's the best performing asset in the world. Maybe Bitcoin's doing better this year. That's another conversation. But it's the best performing asset, more than stocks, and that's a reflection of the word reset gets thrown around a lot, but that's what it is. Gold's being revalued in the world, and the U.S. dollar is weakening against gold. That's what's going on. I hope that helps.
Yeah, and it does. And I think what you're pointing out, I always think of, I don't know what, I'm a hockey guy, but I think of soccer. It's like one team is trying to score on the goal, and it's like, but there's another team, and they're going to push back, and that's China, the U.S. And I mean, those are just the countries that come to mind. So as you point out, the U.S. knows what's going on. You don't think they're just going to sit, or do you think they're just going to sit there and not play? No, they're going to play. They're going to do things to try and counteract what China's doing.
Yeah, I mean, the hockey analogy is great, though. It's like a neutral zone. China's in the neutral zone, but they have the puck. So you don't really, your goaltender is still probably sweeping the ice out there, like goofing around, like taking a drink of water. They cross the blue line and it's over. He's got to pay attention. So yeah, I mean, that's true. Soccer's more boring than hockey, though. Or football.
Well, the reason I think of soccer, honestly, is because I guess I should look at a stat of this: how many passes a team does before they ever get a chance on net. Right. It's such a slow moving strategy game, right? Ball possession, and you just pass around. Oh, and then you get and then it goes back to the other. Whereas hockey, you dump in, you crash it, elbows up, boom, you hammer somebody, you poke it up front. It's a little faster moving. And when I watch this game play out, I'm like, every time you think something giant is about to happen, it's like, no, they pass the ball back. And you're like, why are they doing that? And it's just slow movement of a game, which to me equates to soccer.
Okay, I'll correct myself then. I understand what you're saying because it's a much more of a chess game, and I say it's boring. That's because I'm American. It's not boring. You have to understand the game. When I'm watching in Argentina, it's a lot of fun because they know the game and they're teaching me. But yeah, you're right. It's not two steps forward, one step back. It's two steps forward, a step and a half back, and it takes years to happen. So yeah, you're right. It's a very slow moving, intense geopolitical chess game that we're in right now. That's a good point. I agree.
When you look at the price of gold, just on gold, because I want to ask you about silver. You brought up silver, and I brought up silver before we started, but just hanging on gold for one more second. Like, people were asking, they wanted to ask Martin on stage, and then, we got sidetracked on different conversations. With gold, like, you see the all-time highs right now, and you go, well, there's a 5% chance it goes up this, and there's an 80% chance it goes up that. Like, when you look at gold and you extrapolate over like the next 10 years, what do you see gold getting to? And I know that's probably a very difficult question because there's no reason putting out an actual price, but like, I'm just curious, like, lots of people in different realms talk about all these astronomical figures, and I'm like, oh, I can I get to that? I mean,
right. Yeah. I think you want me to do a 10-year because a 10-year
Sure.
will give me a lot more.
Sure. Over the next 10 years. That you would have scared me, Vince, in 2021, because I was shocked at, like, is this going to take 3 months? Is this going to take, like, because I want things to happen fast.
Right,
and the more I do this and talk to people, I'm coming to the terms with, over the course of my life, what the world is going to look like. You're starting to see things in a broader sense, or look at it in a bigger picture, and you're seeing these moves and how it's the ripple effects and how long the ripple effects take. And so, no, 10-year, yeah, totally.
Okay, so that's a serious exercise. So let me think for a second here while I do that. I'm trying to figure out the major drivers for the next 10 years. And the major, again, this is really, I've thought about this a lot, but I haven't concluded yet. So you put me on the spot. So let me think about this. All right. There are two diverging, I'm thinking out loud, two diverging drivers. One is U.S. needs to reduce its deficit, and so it needs to spend less. And it needs to shore up the dollar to protect it and to make America great again, and all that goes with that. Whether it's successful or not, we still can't spend as much. So the U.S., in gold terms, is in a race to pull dollars out of the market as people are dumping them while not crashing our economy at the same time. So I'm going to call that a net neutral, assuming that we know what we're doing. But what's not a net neutral is, even though we seem to be interested in reducing our debt, Europe and China must spend more. Now, we need to spend more now too, right, for infrastructure and all that stuff. But Europe and China need to spend a lot more. Here's what I mean. China is a museum, and we're not spending money on the military overseas. So we're going to close bases. We're going to bring what's called Pax Americana home, all that Monroe Doctrine, worry about our buddies to the north and our buddies to the south. Remember, bad cop and then good cop, like we talked about before. Let's make it a team one way or another. And Europe's like, oh shit. See, I'm giving you the inflation scenario that's going to happen. Europe is going to go like this. How much did Europe used to spend on its military budget? Call it zero. It's not zero. Call it zero. Why? Because we were putting all the missiles there. We benefited from that too, but we're putting all the missiles there. And now, and because of that, Europe had this great welfare state. Socialism, it's not black and white, but one of the main reasons that the welfare state and socialist democracy concepts in Europe worked so well is because it was on the back of our defense. Okay? And I'm not saying this as a proud American, all right? I'm just saying that's just the way it is. We spent the money on defense, and Europe spent money on keeping people happy because communism was over there, you know?
Well, I mean, just take a look at Canada. Canada, I'm a proud Canadian. I mean, that's a whole conversation on this side now with a lot of different things happening in our country. But why did we get to do what we've been doing? Because we've always looked at our big brother to the south and went, well, if anybody ever attacks us, the U.S. will come in and hammer them with the, like with the big old hammer. So we've never had to meet our spending budget on NATO ever. I mean, I forget how long you have to go back, but it is a long freaking time.
That's right.
Because it's just like, what does it matter? The U.S. is going to take care of us.
Yeah, Canada's the better example, but I haven't studied the Canadian example, but the Canada is the better example. The problem with Canada is we create problems that aren't exactly there. The United States doesn't give enough value. Canada adds value geographically, geopolitically to the United States. Europe doesn't. Europe's like a big fucking buffer zone for a war.
Correct. Yes.
Yeah, that's so. But the other reason is, Canada's the better example. It's like it's the Jack Nicholson scene. You need me on that wall type of shit. That type of stuff. And the thing is, you could see the map. I mean, if you Google the stories or AI the stories, it's there. Europe's countries have all been recommended to now spend 5% of their GDP on military. That's money they used to spend on social safety nets. That's money on social programs. So now you've got Europe. Again, I'm making the case for gold going a lot higher. Now you've got all of Europe, which just experienced a bazillion immigrants coming in, right? Culture clash, a social safety net that's creaking and breaking from all the people that need to use it, welfare recipients, whether they need it or not. That's the way it is, You've got to catch these people. Easy to do when everyone is white and Swedish, white and German. Not so easy to do when you're trying to be a melting pot. So they do that. They're spending 5% on military. They're also spending more money on, in general, they have to become self-sufficient. Because in this new era, you have to be self-sufficient. It's a mercantilist type of era. You need to, Germany let all their manufacturing go. Now they're going to have to build it back up. And then they still have to spend money on the social safety net. Europe, Western Europe, is like in its USSR collapse moment, where they have this huge safety net, and now they have to they're spending on military. So it's almost like the euro goes to, I'll give you the example. The euro goes to zero, exaggerating, hyperbolic. Euro goes to zero. The dollar gets stronger. Gold goes up to $8,000 in US dollars, but in euros it goes up to like 20. Like that's I'm getting at. It's like we're not spending as much. Like the US for the last say 20 years since the Great Financial Crisis, we've been hiding, whitewashing the problems by spending money, and the rest of the world's been like watching us. Now we're done spending, simplifying it, and now they got to spend. China's got to spend. China's got to spend because they have all this manufacturing, and it's sitting empty. To your comment about silver, it's sitting empty. Nobody's buying their things, and if they don't start spending money on their own people, giving them money to go out and buy stuff, if they don't encourage them to stop being savers like us out of the Great Depression, they're done. So they need to find a new customer, and that means they have to spend money. Europe needs to just stop being a museum and reinvent itself. And the U.S., we say we're not spending money. We're going to spend money, just not the way we did. We're not going to spend it over there. We're going to spend it over here. So we're going to have secular tailwinds pushing inflation up, something that I used to call the anti-Goldilocks. And that means you're going to have money that needs to be spent, good inflation, for lack of a better word. We need to build factories. We need to buy raw materials in Europe, right? In China, we need to spend money on social safety. China's got the worst social safety net in the world. When they left communism, theoretically they didn't leave communism. They just they have nothing. Like people just die. they don't have the social safety net that Europe has. Let's put it that way. Even though they were communists, they cut that shit off when they started going capitalist. They're in the process of re-spending on that. I just read a great report on it by Rory Green on that effect. But anyway, so they're spending on their social safety net. Europe is spending on manufacturing, and we're spending on trying to figure out what kind of things we can make to sell. So raw materials get bought. All these things get bought. And unless we have free energy, which, it could happen, thorium reactors, I'm not going to say fusion, but people talk about it. Unless we get that, gold's going to go up because there will be two currencies in the world. One will be the U.S. dollar, simplifying it, and the U.S. dollar will be all about upside, growth. And the other will be the Chinese yuan, gold-backed indirectly, and that'll be all about safety. So we are going to need gold. Canada and the U.S. will need gold to be traded with China, and China will need dollars to be traded with the U.S. and the Western Hemisphere. And you just need to have gold. You can't. Gold's money, and so more people need more money. You want to do the math? It's like you could look at people look at M2. I used to do the math. I don't do the math anymore. Maybe I should. People look at M2. 8,000 is my number, and that number is borrowed from a technician, Michael Oliver, who basically says 8 times the moon, right? And I think it's a conservative number. 10 years. 10 years, right? Not 10 minutes. 20,000.
10 years.
20,000. Why not? Why not? And it sounds like I'm just throwing it out there. I'm not. It's like, monetary. If we go multipolar, then everyone's going to have gold. The float of money out there, the amount of debt. The debt's not going away. So you're simultaneously going to see stocks and gold go up for a long time. Not tomorrow, but I'm a believer that 8,000 is not a problem. I'm a believer that 5,000 is not a problem by 2028. Right? So people that are like gold bugs are like, and I'm a gold bug. They're like, that's not much, but shut up. It went from 1,700 to 3,000 in 4 years. Shut up. It's gold. It's not going to fix you economically. It's going to protect you economically, et cetera, et cetera. So that's my answer.
Well, and I just
20,000.
I think of how many new gold bugs have been built because of COVID, right? I mean,
that's right. That's in the West.
I mean,
that's in the West.
In the West.
In the East, they're 20-year-olds are gold bugs. Like we're all our kids are crypto kids. They're going out buying gold beans. Like it's crazy. It's like tech to them. Anyway.
Like to me, you're watching this conversation, if you go back, I don't know, you'd know this better than I would, Vince, but you go back to where is it 10 years ago? Is it 20 years ago? What's the word? The popularization of gold is at, to me, all-time highs. Like it's only people start learning about it more and more. If you would ask me what fiat meant 5 years ago, I would have been like, I have no idea, right? And yet that in itself, all those things, people are just learning about it. That's why riding around with Martin Armstrong was so fascinating. He started talking about currencies and and I was just like, this is so fascinating. And if you would have asked Shaun, a 5-year younger Shaun, that question, I would have been like, what's the point? Like, what does it matter? And that is a repercussion of what they did during COVID. One of the many repercussions is started to reframe this different world and different people and different groups of people looking at this. So with gold and silver, precious metals, like people are staring at this way different. And that's always been the case, but not at such a level as what's happened over the last couple of years. So when you talk the next 10 years, I just see more adoption of it, not less. Like there's going to be way more adoption of gold. You can see what BRICS is pushing. And I mean, they're doing it for their own reasons, but over here in the West, I see more regular everyday people adopting gold and silver. And that's only going to increase demand. Or the demand is increasing every single day.
I think, you bring up a point that I want to corroborate in reverse. I mean, you're describing generational awareness increasing. So while you and I can look at the screen and go, it's overbought, everybody's talking about it. Yeah, for the next 5 minutes, next 5 weeks, next 5 months. But generationally, people are changing their values. And so it goes from esoteric and abstract fiat, right? We didn't even know what fiat was 20 years ago, Like you're saying, we go from esoteric and abstract to concrete and stable. We go from secular liberal orthodoxy to, ethics tied to religion aren't really a bad idea. So there's a pendulum swing generationally coming, and gold is at the heart of that. And the reverse of that, when I was a kid, it was the end of the gold era, right? So you were coming out of it too, right? You're younger than me, but I got to see the whole stagflation part of it. But what happened was, after World War II, everyone freaked out and they said, gold, we have to be safe. And that was smart. And then after 1971, coming off the gold standard, a long-term generational, multi-generational thing started to happen. The government, by getting the Saudis to accept dollars, by pricing oil in dollars, by getting Mao to accept dollars for trade, by starting the whole Chinese-American trade thing, by telling people slowly, the dollar is as good as gold. The dollar is as good as gold. Separating gold from the dollar, right? You had to have gold. Then you had to have a dollar that promised you gold. Then they took the gold away. That was 20, 30 years of slow generational mind changing that came along with neo-Keynesianism. And now that's gone as far as it can go, and we're saying, wait a minute, that doesn't work anymore. We borrowed too much. We spent too much. We've given people in charge of the money too much latitude. They've abused it. Let's pull it back, because that's how World War II started. It's one of the things, the debasing of money, the debasing of morality, the debasing of ethics, the debasing of your fellow man. It's like, oh, I don't care what happens to you. Those are the things that slowly happen simultaneously with us going on the fiat and going on the neo-Keynesian and neoliberal mindset. Mind you, it was excellent for years. And in 2009, 2008, the financial crisis, that was the warning bell. And we knew that. China knew that. And to your point about generational changes, in 2016, China started making the changes culturally that you and I are talking about. China started encouraging religion. Now, for them, the religion is Confucianism. Confucianism is about, they weren't like that for years. They were Maoists, revolution, don't respect your elders. Like they were crazy for a while there, Then they went Confucianism. And the Confucianism is respect your elders. Stay in your lane. Think of the long term. China culturally changed themselves to adapt or adopt Confucianism, kind of like we had a Protestant work ethic. And so they went stable, less abstract. And it took a generation. What's the greatest economic miracle in the world is the changing of the Chinese. 50 years ago, these people were eating tree bark and they were a foot shorter. That took 20, 30, 40 years. And now we're a little shorter. We're a little poorer. And, thank God we're eating Cheetos, but it's the same idea, we're eating shit. And so now, to your point, we're slowly moving towards a generational change. And I think you're right. I think that wakes people up to gold and silver and Bitcoin as well. That's right.
Yeah, generational change. I think you just, you were complimenting me earlier on how I summarized something. Generational change, Vince. I think that's a very interesting way to put it. I'm going to have to think on that for a bit. I'm assuming part of the audience is going to think on it too, because you're seeing this change, and everybody wants. You just want to snap the fingers and, you got the magic lantern, you rub it and you ask for your wish and boom, everything changes. But like, it doesn't happen that way. It's very slow and at times really methodical on how change plays out. If I don't ask about silver before I have you out of here, though, I'm going to kick myself.
Right.
You'd written like I was telling you before we started. I watched. Now this is a couple of years ago. I want to assume I forget when I watched it, but it was talking about bargain buy silver compared to gold prices. It was skyrocketing up, and that silver was going to chase it. And you had your thoughts on that silver. I've enjoyed silver. What are your thoughts on silver, where it sits today? And one of the things that you put out on X was now I don't know if this is muddling the issue, but I'll add it in, and you can just do it as you want. You'd said China's solar power panels will become a source of silver now on the market. Watch closely. Everything they do is going to be outlawed in the U.S. The idea is to make them financially weak so that they sell their valuable assets. Pay attention.
Yeah.
Now, I don't know if that adds into the silver conversation. You can do it if you want.
It's directly related. I traded silver before I traded gold, and not just saying that. Like I own physically more silver than gold, but of course, more money in gold because that's the nature of it. There are currently, and I don't mean like the next 5 minutes. I mean like for the last 3 years, there's a mechanical thing that happens in the market that continually depresses silver, and it's because it's profitable for banks and traders to do this. It's a carry trade without getting too technical on it. It kind of goes like this. Gold is precious. You only use it for money. It's too expensive to use for anything else. Copper is industrial. You use it to wire things. What's silver? Now, we, people like you and me, say silver is the best of both worlds. So we say it's gold. I say it's Goldilocks. I say silver is going to be an increasing industrial demand as time goes on. And as gold goes up, it's going to be even more important as a substitute for gold because there's just not enough gold in the world. That's my silver thesis. Then the central banks say we want gold. Well, why don't they want silver? Well, they don't want silver because it's industrial. If people are using silver, then they can't get their hands on it. So they stop buying it. So nobody buys silver. Traders know this. I know this as a trader. Banks know this. Central banks know this. And they say, well, Vince and Shaun look at silver as like the best of both worlds. We look at it as something that really doesn't have a personality. Everything else is specific. So we're going to buy gold. And we're going to say, well, silver is semi-precious to them. It's how they operate, right? Semi-precious. We'll sell silver as a hedge against the gold. And this stuff that people don't talk, I did this as a trader. You buy one and you sell the other because if gold goes down, you want to be hedged with silver. And if the economy does better, silver will go up. So if you think there's going to be a recession, you sell silver and buy gold. Not to mention, when you put these mechanical trades on, the margin overlaps. So thousands of trades go down, buying one, selling the other. And it goes the other way as well. And so for years, for decades, people have looked at silver as a sourcing metal for gold. How do you get silver? Well, you can get a lot of it from heap leaching, from lead, from other base metals. In fact, it's grouped with base metals when you look for it in the earth a lot, not always, but a lot. And so the banks, and this is where it gets crazy, and this is why it goes up when it goes up. The banks say, silver, we don't care about it. We can get it anywhere. And they rely on this constant silver being mined. What ends up happening is there isn't enough mined. And so they start borrowing it from each other, and we have these big nothing and then ridiculous spikes because the market is too reliant on easy silver, and then easy silver dries up. And the buying in gold is not translating to silver for two reasons right now. One is I just described to you. The other is the world, believe it or not, even though there's all this debt, the world is on the brink of a potential recession because they're not spending enough right now. It's crazy to say, but Europe needs to spend more. The U.S. needs to spend more. China needs to spend more to raise the whole thing. And because it's not spending more, people are worried about recession right now. And because they're worried about recession, they're not buying silver. Now, on top of that, the solar panel thing is a two-sided coin. Should I go into that, the China solar panel thing?
Yeah, please do.
Silver is, silver's precious, but I don't want to use the word precious. I want to speak as if I'm China. Silver is a critical mineral. Yes, it's precious. In a pinch, we'll use it as that. But it's this critical mineral that has the best electrical conductivity, the best reflectivity, and we cannot figure out a way to substitute for it, just like you can't substitute for oil when it comes down to it, right? It's the king. Oil's the king for MMBTU, maybe natural gas, depending how you look at it. But so China says, we want silver. We're going to make silver panels, and we're going to sell them to the rest of the world, right? Now, there's a little nuance in here, too, about the industry itself. When you making silver panels, silver panels are not going away, okay? Let's be clear about that. Maybe windmills will go away or all this other nonsense, but solar panels are going to get better and better. So in the beginning, the problem with solar panels is, this is about the industry before I get into the whole metal thing again. In the beginning, solar panels are all about, we need more electricity, so let's use more silver, right? So they're going to use more silver, use higher quality. It's all about top-line growth. We want to have better productivity. And then when it gets to a certain point down the road, they'll start trying to figure out ways to use less silver. Throw a little aluminum in there, a little bit more silicone. Then you start looking to cut costs, right? But we're not there yet. But what's happened now is, because of that's what's going to happen down the road. There'll be cost cutting in silver, which means less silver is used per panel, which means the panels go down in price, which means more panels get bought. So there's a balancing effect that will, kind of like a car. Every Ford invents a car that everyone can buy. And so the demand goes up for the materials that go into the car. That's the idea here. But between now and then, there's this trade war. And now we go to that post, that tweet that I had. China owns, it's astounding, China owns 85% of the global solar panel supply chain. Okay? Supply chain. Pull it out of the ground. I mean, they get silver from us. Pull the silver out of the ground. Silver supply chain. Here we go for solar. Pull it out of the ground, filter it. After you filter it, you refine it. After you refine it, you make it into a powder. After you make it into a powder, you make it into a paste. After you make it into a paste, you slather it on. After you make it into a piece of a panel, you make it into a whole panel. After you make it a panel, you ship it, you install it, and boom, you're done. Right? Well, that whole supply chain, 20 years ago, China didn't have anything except pulling it out of the ground. Now they have everything except powder. Powders, Japan has the powder market. Making powder is really hard to do. You have to have some really good stuff, and they'll probably do it too. So China's got this whole industry now. They went from just digging holes and pulling silver out to going, oh, refine it, re-refine it, make it into, get the powder, give it to someone, have them give it back to you as a powder, make it into a paste, spread it on, optimize it, mechanize it, do DuPont stuff with it. And now you make these solar panels. You say, okay, here's the solar panels. And the U.S. is like, we're not buying them. Trade war, we're not buying them. And that's what's going to happen. We're not going to say, it could be a trade war. There's a chip in there that makes them spy. And maybe they are spying on us. I would not doubt it. But you, in a world that's deglobalizing, you become very protectionist. So the U.S. puts a fence up and says, no Chinese solar panels.
And by no Chinese, by no Chinese solar panels, do you mean no Chinese solar panels, or you mean they're going to make them not cost effective, meaning they're putting tariffs on them so that when people go to buy them, it's like, well, I can't afford that. That's right. That's what you mean by no, correct?
Well, no, I mean, speaking as an American trade person, I don't know how we're going to do it. I don't know how we're going to get the world to accept how we're doing it, but we're going to do it. Are we friends with them? Tariffs will negotiate it back down. Are we enemies with them? To the fact of being in war, we'll embargo it like Iran. Are we somewhere in the middle? We'll keep making excuses. Non-tariff trade barriers. It's like, you know what? Pete's Coffee, it's good coffee, but we have an FDA standard. No, you can't use Pete's Coffee. And then they negotiate it. It becomes a big problem. It's a slowdown. It's like go to the back of the line. Go to the back of the line. So in the U.S., it's very easy. And by the way, I want to make it about security. Since the repatriation of and onshoring and reshoring of supply chains and domesticating manufacturing has become key again, it's very easy to do the following. All you have to say is national security, because it's a critical metal, right? It's a critical metal, but the U.S. is using it in everything, right? Oh, well, we have to protect our steel industry. We can't depend on foreign steel like we did in the 70s, right? So tariffs. We won't import Japanese steel. Well, maybe we will if you build a factory here. Maybe we will if you throw some money in here. We'll do all those things. But with China, it's like we're in the process of divorcing them permanently. Maybe it won't be permanent, but we're in the process of that. So it's like one at a time. We want to kick out their economy. So who are they going to sell solar panels to? What, the Salafis in Iran, the Wahhabis? That's probably Sunni, not Shia. Like, who are we going to sell it to at that price? You're not. And so, how's China going to sell a $500 solar panel it costs them to make for $2,000 in the U.S. if we won't buy it? I got to find someone else.
Yeah, you lose your biggest consumer.
Yeah, the customer's always right in this case. And it doesn't always work that way, but right now the balance is that, like, we're betting as United States is betting and could be winning. I'm very friendly. I love what China has done economically, but let's be clear, they need to figure out a way to get replacement customers for us. We're their biggest customer. That's not healthy. They need to leave us too. So they have to figure out a way to replace that. And that means giving their people money to spend to create that. So the customer's always right now. But manufacturing-wise, we're dead. But, we're working on that. So we're betting, we meaning the United States and the West in general, is betting that we can fix our manufacturing before they train their people to buy stuff. That's it. So to bring this back to silver, right? Because that's what we're going with,
yeah.
Right? I got to bring this home to silver. So let's pretend you have all these solar panels with silver in them. And let's pretend, it's not going to happen tomorrow, but let's pretend for some reason China, what's going to happen is they're not going to buy as, I'm not saying this is happening, but they won't buy as much silver. Now, they are going to buy as much silver because they're not just buying it for solar. They're buying it for military. They're buying it for investment. It's a critical metal. They understand this. China used to produce a shit ton of silver, excuse my French again, but they don't produce as much anymore. They're importing, remember, they're digging out of the ground and make stuff?
Yeah.
Now they're buying it from Mexico. It's frequently Peru, Chile, whatever, in Latin America. They built these supply chains because they're running out of silver domestically. So now you've got China, all these solar panels, they can't sell to anyone. Saudis aren't going to buy it. Brazilians aren't going to buy it. There's only so many deserts you can put them in, right? I mean, I'm simplifying it, but what are they going to do? Let's pretend, number one, they'll stop buying silver because they don't have any demand. They have all this inventory to sell. Two, maybe they'll start selling silver. Maybe they'll start selling solar panels. This is where the banks make their money. And I'm saying this genuinely, it's how it works, right? So it becomes a scrap thing. So let's pretend that there's 1 million solar panels in the U.S. made in China, right? Canada, U.S., solar panels, and the U.S. says no. National security, that's your reason. You're not going to have solar panels from China anymore, not unless we approve them one at a time. So we slow it down, right?
Yeah.
And not unless they, I don't know, stop threatening Taiwan. Like all these things are in motion now, right? So what happens in the U.S.? All the solar panels get ripped out. Government does this all the time. Government destroys or intervenes and interrupts a momentum. All the solar panels get ripped out. Well, who's making solar panels now? Elon Musk is, right? So he can make Solar City was his business, and it's brilliant. You think about it, like Tesla, the battery, the solar panel, the car is like the house, and now you have this whole vertically integrated industry. So who's ready to make American solar panels? Well, he is. Well, where's he going to get the silver? Oh my God, they're going to get them from the panels that we're stripping out. And who gets the panels that they're stripping out? Goldman Sachs, JP Morgan, Morgan Stanley. They get involved in the scrap business. That's how it works. You go to a junkyard, a metaphorical junkyard, and you say, what do you give me for the silver panel? And you get some money back. It's government. It's like asbestos removal, I'm simplifying, but that's what it is,
Yeah.
What?
No. I'm following along.
Yeah.
To me, it's the for the listener who didn't. You said it kind of in passing, but one of the things you were talking about was national security, right? They're going to say national security because that's such a broad blanket. And what they're doing with that is they're saying there's a chip that's spying on you and all these solar panels. And you go, whether that's true or not, doesn't matter. It's going to send a shockwave through the U.S. going, oh, man, they're spying. We can't use those. Who could we use? And you're pointing, well, we got this nice, shiny guy named Elon Musk who's going to start building it. And we're going to turn this whole industry into scrapping, pulling the silver out so we can redistribute that through Elon Musk. And he's going to make you, and you can still have your solar panels. We're just going to make them American made. And the banks are going to get involved because there's going to be money, and it's going to, and you're just changing the framework of the American consumer from we want what the supply chain's already there. We're going to disrupt it. We're going to slow it down. We're going to make it very difficult, which is going to annoy everybody. Plus, you throw in national security, so now everybody's a little skeptical, and you just slide it over. And there's this nice shiny new object there that's ready to solve all your problems. And wait, it's American made, and it can get to you real fast, and it's going to be nice and simple. And it takes your supply chain that China has built over the course of however many years. But you pointed out again, Vince, by having one customer, this was always the risk, because when they stop, now you go, oh crap, we got to find somebody that wants this. But that's a problem because it's not oil and gas. It's a solar panel, which is not exactly every country's top of the list to get energy,
Right.
even if they tell us it is.
That's perfectly said. I should just call you with stuff and ask you to say it for me. That's right. That's exactly right. We were talking about the 70s and 80s stagflation. To segue into that, because it's the same thing. In the 70s, in fact, in the 70s and 80s, foreign countries were selling cars that had better gas mileage. Volkswagen Bug, right? The original Beetle, and all those little tiny Japanese cars when they came out. And the U.S. was like V8s and these big, cars, and no one could afford them. And so what did the U.S. do? The U.S. restricted the import of those cars by putting tariffs on them. And they said to the U.S. car manufacturers, we're protecting you. Start making better cars, smaller cars. So you got, some good small cars, and you got some bad small cars. We made a small car called the Pinto. And the U.S. companies like, well, we're being protected. The price of that Japanese car goes up $500 coming into our border. We'll charge $490 more for us. And what do you get? Inflation. See, the solar silver that's going to be sold isn't going to be sold and hit the market like that. It's going to be bought by the next manufacturer. And the prices are going to go up for things. So you end up buying a Ford Pinto, right? It's not Chinese made, but I don't know if you're familiar with it, but the Ford Pinto blew up when it got its accidents. It had like a big gas tank in the back that was like, anyway, the point is there's precedent for this. You protect your industry, you help your industry. And if your industry does it right, as I think Musk probably would do it right for the most important things, you substitute. So Musk becomes the buyer of silver, right? JP Morgan goes out and gets it for him. That's what they do. These banks, the JP Morgan especially, they deal in physical silver. Where do you think China gets its silver? It doesn't buy on the COMEX. JP Morgan goes out and goes, you're a miner. You're a client of ours. Got any silver? You got a pile over there from a heap leaching? We'll take it. Goes to China. Silver is so under the radar. And by the way, this is why silver remains depressed, because the banks bet on the cyclicality of the economy. Silver's hot. Okay, we're going to have to do something to tamp it down. We'll sell more futures. The economy's coming off. Okay, then we'll just wait for it to come up. We'll wait for the retail investor to sell it, right? We'll wait for a solar panel to go out of business. We'll wait for this to happen. We'll take over a silver mine that defaults. And that's why silver does it. And silver has it. We'll have its day in the sun. I think I'll end on a good note. Last year, after the BRICS, the BRICS summit, Russia announced that they were going to start buying silver, and they didn't call it a critical metal, but it was a critical. They were like, we're going to buy all these metals, and we're adding silver now. And we all the silver people at my store, like, oh, it's kind of cool they did that, Eastern central banks used to buy silver all the time, but now Russia's buying again. I think, knock on wood, I think this year, I said it before, I'm not sure, I would not be surprised if we come out of the BRICS meeting this year where the BRICS start saying, and you know what? Silver is even more important than we told you before. And we're going to start buying it. And I could see that happening. So I believe silver goes from a critical metal below the radar to a critical metal above the radar on the BRICS list. So I'm a buyer, right? I'm a buyer. I bought gold and silver about 6 months ago. That's my most recent purchase. Actually, 3 months ago, I bought gold at 3,100 and silver in that area, where it was, silver was very volatile at that time. That's it. So yeah, I think it's that's it. It's not gold. It's
Vince,
more important than gold.
Appreciate you coming on and doing this, and hopefully 2026 for Cornerstone attendees, we'll have a Vince Lanci on the card. All the best, and look forward to the next time you hop on.
Thank you so much, and hello to everyone out there, and thank you.